This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, a very happy Monday. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. It is a new trading week, and as Tim mentioned just a moment ago, stocks and bonds both are higher. I think there are sure things in life, and then there are, kind of sure things that maybe aren't so sure. But it does feel like it's pretty sure when it comes to a Fed rate cut come Wednesday.
Well, I was going to say the sure thing this week, Carol, is that the Fed is going to meet. I think we can just leave it there. And
you don't think it's sure that they're going to cut rates?
I think it's sure. I think the big question is what does the dot plot look like, and what do things look like for the remainder of the year and into 2026? That's the big question.
All right. I will say, though, for certain, there's a lot coming at investors this week. Just check it out, folks, because it is a lot of central banks meetings coming at investors this week. Of course, on Wednesday, we have the decision by the U.S. Federal Reserve. Also on Wednesday, you have the Bank of Canada. Thursday, you have the Bank of England, and then Friday, the Bank of Japan. And that's not all, Tim, because you have some things also going on that are going to impact the narrative.
Yeah, the Senate expected to vote tonight on President Trump's nomination of Stephen Miron to join the Federal Reserve. We'll get retail sales also tomorrow, the Fed decision on Wednesday, of course, and then Friday, Carol, a big, I don't want to say meeting, but conversation between Xi and President Trump.
Already exhausted, just thinking about it. All right, so over the next 60 minutes, we want to get into the composition of the Fed, who's in, who may be out. We're going to talk about the case that one of our guests has for making a Fed rate cut at each of the next 5 meetings, including the meeting this week.
Also on that call on Friday, the tangled web that is U.S.-China relations. And speaking of tangled webs, AI and its cozy and contentious relationships.
We're also going to talk the big money of sports with the CEO of Blue Crow Sports Group. All of that to come. First up, though, let's get a check on the trade with Charlie Pellet.
Thank you very much, and here's what's going on. The Dow, the S&P, NASDAQ, all pushing higher right now. We are on track for a record close here, depending on what happens over the next 2 hours. Keep it locked into Bloomberg Television and Radio. We got you covered with the S&P right now at 66.13 on the S&P, a gain of 28 points, again, a record up 0.4%. The Dow has been swinging between gains and losses, higher now, up 26, up by just under 0.1%. The NASDAQ Composite Index up 186, up by about 0.8%. The 10-year 4.03% with a 2-year 3.53%. Spot gold is up $38 the ounce, up 1.1%, 36.81. And West Texas Intermediate crude up 1%, 63.32 for a barrel of WTI. And Bitcoin right now down 0.5%, 115,238 on Bitcoin. So Wall Street's kicking off the week with gains. Traders see a Fed rate cut on Wednesday as a sure thing, while awaiting validation from officials on bets for a series of reductions extending into next year. Tesla CEO Elon Musk buying about $1 billion worth of stock, sending shares higher. Tesla is advancing right now by 4.4% off session highs, a member of the Mag 7 index. That index up by 1.9%. Again, recapping, S&P 500 index up 0.4 for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, folks, you are set on this Monday. All right, so it's a big Fed decision on Wednesday. You kind of know that in a big way. What we don't know for certain is kind of who might be at that meeting of the Federal Reserve, because, Tim, we've got President Trump asking a U.S. appeals court to let him fire Fed Governor Lisa Cook over allegations of mortgage fraud. That could come at some point today, so we're watching that.
Meantime, the Senate is expected to vote tonight on Stephen Miron's nomination to join the Federal Reserve. With more, we head to Bloomberg News Bureau in Washington, D.C., and to Bloomberg senior reporter Zoe Tillman, who covers law and politics, which, yes, means that she has been super busy and was busy over the weekend, I can imagine. Zoe, we spoke with you when you were here in New York on Friday. You were in our studio. You gave us an idea of what to be on the watch for over the weekend as we do head into this week and that Fed meeting beginning tomorrow. What can you tell us now about whether or not Lisa Cook will be present and be voting at tomorrow's meeting?
I don't know. And that is where things stand, is no one knows yet with any kind of legal certainty whether Lisa Cook can go to that meeting tomorrow. The U.S. Court of Appeals for the D.C. Circuit set a very fast timeline for both sides to file briefs after a district judge here in Washington said that the effort to fire her was, likely unlawful, likely violated her due process rights. And the D.C. Circuit asked for briefing by Sunday. That wrapped up over the weekend, and we are now on watch for a ruling. Also with the knowledge that especially if the Justice Department loses at this stage, there is still a very good chance, even with the hours ticking down, that they could ask the U.S. Supreme Court to intervene before tomorrow morning.
Oh my God, could all of this ultimately get done before tomorrow's meeting or the beginning of that two-day meeting by the Federal Reserve, FOMC?
As we've seen this year in, the 24 or so cases that have come up to the justices related to President Donald Trump's policies, the court can act quite fast. We've had, overnight, over the weekend, rapid fire cases involving immigration decisions, imminent deportations, folks about to be put on planes. The justices can act quickly when there is a demand for them to do so. They don't have to do anything here. It certainly could be the case that the circuit enters an order. The Justice Department asks the justices to intervene, and they do nothing. They kick the can down the road. They could issue what's known as a sort of administrative stay, which does something in the meantime without signaling necessarily what they'll do long term. There are a couple options for them to act. But, until Lisa Cook steps in the door, it's still anyone's guess for who could do what and when.
But legally, is she allowed to step in the door right now? Is she allowed to go to this meeting?
As of now, there is an injunction from the district court judge, and that is the operative court order right now that says that the effort to fire her, Lisa Cook has not conceded that she was fired, but that the effort to oust her was not legally valid or likely not legally valid, that this idea that she must be fired for cause, which is part of the Federal Reserve Act, that the conduct the administration has accused her of, which relates to allegations of mortgage fraud that she has denied, that none of that is what is meant by for cause, that it has to really do with conduct in office related to an inability or a deficiency in how an official is doing their duty, not to something that happened long before they were even in office. The judge said that doesn't pass muster, and giving her notice purportedly by sending posts on social media of the allegations, of the intent to fire her, is not due process, so failing on multiple fronts legally. So that injunction is currently the only order that we have right now, barring that move to oust her.
Having said that, in a society where we try to teach our kids that actions have consequences and it doesn't matter if somebody else has done it but they haven't been caught yet, we do know that there are these allegations when it comes to mortgage fraud. There was some news, I guess, over the weekend that came about how Lisa Cook described this disputed Georgia property as a vacation home. These were documents viewed by Bloomberg News. So what do we know maybe more about actually the case itself and the allegations of whether they are accurate or maybe not?
There's been very little formal vetting of the evidence, whatever it is, that exists in this case by the courts so far. That really hasn't reached that stage. But certainly we know that, my colleagues here at Bloomberg have seen documents that show she did list it as a vacation home. The primary allegation is that she had two properties that were allegedly listed as primary or principal residences, which when you do that get you better terms on a mortgage. And that's why you can't have multiple versions of that.
Why haven't the courts looked at the evidence? For me, it's
that's my question too, Carol. It's like, yeah.
When you do that?
Right now, it's really proceeded on sort of the four corners of the allegations, whether on their face there's enough there for the judge to say one way or the other, I can enter a preliminary injunction. This is not a final ruling on the merits. There hasn't been a trial. A lot of times we're getting these sort of early on, has the government done the bare minimum of what it needs to do to have its policies survive in court? Or has a plaintiff presented the bare minimum of allegations to support the types of claims they want to proceed to? Courts don't jump right into all of the evidence right away and do fact-finding. They want to make sure that there's enough legal foundation to get to that point, and that's where we've been.
But as a result of what Carol mentioned, the reporting from our team over the weekend, that saw the documents that show this was listed as a vacation home. Is there a chance that this week we might actually see this all just become a moot point because the way it was classified in this potential evidence here?
I don't think anyone knows what's going to happen after tomorrow. I think the focus has been so much on can she participate in this meeting, and that's really been the urgency surrounding all of the action up until now. Normally, a regular case would not have proceeded this quickly. The court was asked to rule on this, immediate emergency basis because the meeting was happening. Once that, deadline, so to speak, passes, there's a bit more breathing room for everyone involved to figure out this case going forward.
Going down to the wire. Gotta love it.
Look, we don't have any more time for Zoe, but I'm just thinking, who pays the legal fees in a situation like this?
I don't know.
Yeah.
Government. I don't know. I don't know. Okay, that's another Bloomberg story to come. Zoe Tillman, thank you so much.
I'm always thinking about the lawyers and the fees. I don't know.
Ka-ching, ka-ching.
Yeah.
Bloomberg senior reporter Zoe Tillman. She covers law and politics. We're going to stay on the Fed and to the Wednesday decision by the U.S. Central Bank. A quarter-point reduction in rates is seen as likely when they announce their policy decision. We'll also get a dot plot, so we'll get some projections on maybe what's to come. Markets have priced in reductions continuing into 2026 to ward off a recession, and we've seen that drive U.S. Treasury yields, Tim, to the lowest in months and propelling U.S. stocks to record highs.
Bill Dudley, former New York Fed president and Bloomberg opinion columnist, discussed the outlook for this week's Fed policy decision and the future path of interest rates.
Right along with everybody else, I expect a quarter-point cut. It's baked in the cake. I'd be surprised if they do anything else. There'll be guidance because they're going to publish the summary of economic projections, which shows their interest rate outlook for the rest of the year and into 2026 and 2027. And I think the big debate there is, do they show one more cut after September, or do they show two more cuts? And I think it's going to be a very close call between those two outcomes. I'm actually expecting very few dissents on the side of no rate cuts, maybe 0 or 1. The other side of the equation is, are we going to get 50 people supporting a 50 basis point rate cut? And I think the only person I'm expecting there perhaps is Steve Moran, if he gets confirmed and is sitting on the FOMC on Wednesday afternoon.
There you have it. Former New York Fed President Bill Dudley, who was a Bloomberg opinion columnist earlier today on Bloomberg Surveillance on Bloomberg Television. Carol, we had a great guest with a view on this week's Fed decision.
We do indeed. Great to have with us a former Bloomberg colleague, now senior U.S. economist for the Conference Board, Yelena Shulyatyeva, joining us from Long Island. Yelena, so good to have you back here with us. Do you agree with former New York Fed President Bill Dudley?
Well, on certain points, yes. And I guess everybody seems to agree that we're going to have a 25 basis point cut tomorrow. So I guess the most exciting thing to watch will be to see who's going to be at the meeting and not what they do, right?
Yeah.
I think, in terms of dissents, we actually could see a little bit more of difference in opinions. And, if Stephen Myron is going to participate in the meeting, he may actually dissent on the dovish side in favor of cutting rates even more than 25 basis points. Or we could see a hawkish dissent. That is quite possible. I think, the previous summary of economic projections showed 3.5% forecast for core PCE this year. So if some of these participants still think that inflation is going to rise as much, they may also dissent on the hawkish side. So it will be definitely a very interesting meeting, and we will see how many cuts they will price in. I totally agree with Bill Dudley that that is probably going to be the most interesting thing, to see how many cuts are in the dot plot.
Well, let's take a step back and just want to get from you your view of the U.S. economy right now. Carol and I have spent quite a bit of time over the last few weeks talking about the tension between the Fed's dual mandates when it comes to stable prices and maximum employment, given the cracks that are starting to show in the labor market. What do you think is more important for the Fed to focus on at tomorrow's meeting and then toward the end of the year?
Totally. I think that's exactly the thing that we are watching. So now the mandate is pretty tricky to follow, right? So there are the two goals are in conflict. And we actually think that inflation will rise. We think that inflation will rise above 3% in terms of PCE towards the end of the year due to tariffs. But we also see a significant slowdown in economic growth. The economy has already slowed quite significantly. In the first half of the year, growth really fell below 2% if you average it up Q1 and Q2. So don't be fooled by 3.3% GDP growth in the second quarter. So it's due to gyrations in imports ahead of tariffs. So, and we do see that the economy will slow further in the second half of the year, below 1%, quite frankly. So we spend quite a lot of time.
So, Yelena, stagflation or recession, or how are you potentially seeing it?
It's like, these words are very dramatic. We don't, expect either. So stagflation is really inflation getting out of hand and inflation expectations getting out of hand. We don't project that. So we do see a pickup in inflation and slowdown in economic growth, but not to such a degree that also we forecast a recession. No, we do think that there will be a significant slowdown, but growth will probably remain positive. And that will be very tricky to read in economic data.
One of the things I'm just curious is, President Donald Trump, even today, predicted a big cut from the Federal Reserve this week ahead of the meeting. And we know he has been, for a while, since he really came into the White House for this second term, talking a lot about the Fed, the composition of the Fed, what Jay Powell should be doing. Is that input from the president? How is it maybe impacting, or maybe more so politicizing, the U.S. central bank? I know we can say they're not going to be political, but it's hard to kind of ignore all of that's been said and the pressure and possibly the changing in the composition as a result of President Trump.
Well, it's a very good point, Carol. And, obviously we all watching what is happening with the Fed and how it affects Fed independence. I think the Fed and each and every participant in that meeting will actually try to make as much effort as they possibly can to really address this in a very non-partisan, non-political way. Looking at the data, looking at the same data we'll all look at, and just come up with the best possible projection and solution for how they see the economy will evolve. And we have to listen to them and really believe that's what's happening. I think, yes, the recent news are very important because they draw attention to what is happening with the Fed. But what's happening inside of the Fed and at that meeting will be solely focused on the economy. That's what I truly think.
Yelena, just 20 seconds. What would change your view on saying that the U.S. is not necessarily at risk of negative growth in the near future?
Consumers, keep spending, and that's really an upside risk to the economy. Yeah. But unfortunately, I think that consumers, kind of like spending here and there, but they're getting tired of all this high prices.
All I'm going to say is my daughter, who, she's been a consumer for a long time, but now that she's starting to have her own job and her own place and do her own consuming, is just like, why is everything so expensive, Mom? And I'm like,
you don't have to cut her off, Carol. You don't have to.
There is a point.
You don't have to.
Love her incredibly. She's
the bank of mom and dad. It's not. It doesn't have to close.
Are they never cut off? I mean, my dad was giving me gas money until I was beyond than I should have. Yelena, thank you so much. Yelena Shulyatyeva, Senior U.S. Economist for the Conference Board. Coming up, we talk the U.S. and China, progress, problems. We get the latest.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, Nasdaq. They are both higher right now. S&P up 23 at a record 66.08. gain now of 0.4%. The Dow back in the red, has been swinging between gains and losses. Lower little change now, down 6 points. We've got NASDAQ up 178 for the NASDAQ Composite Index, up now by 0.8%. 10-year 4.03% with a 2-year 3.53%. Gold is up 1%, 36.80 the ounce, and West Texas Intermediate crude up 0.9%. 63.26 a barrel. Alphabet has joined an elite group of companies valued at more than $3 trillion. Alphabet shares, they are advancing today. Right now, we have got Alphabet up by 3.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, high-level engagement between Washington and Beijing has kicked up quite a bunch this month. Now, keep in mind, we do have a potential in-person summit meeting between Presidents Trump and Xi when both are expected to attend an Asia-Pacific Economic Cooperation Forum in South Korea. Tim, that's expected at the end of last month. So that's kind of the bigger backdrop here.
Yeah, okay, so it could come at the end of next month, but some headlines already coming out today, including social media posts from President Trump, who said he would speak with Chinese leader Xi Jinping on Friday. All this following talks between negotiators that resulted in a framework deal to keep ByteDance's TikTok app running in the U.S. So where is this all-important trade and geopolitical relationship really? We're going to head to the Bloomberg Washington, D.C. News Bureau and bring in White House reporter Skylar Woodhouse, who joins us from there. Skylar, where is the U.S. and China in these talks? What's the status as it stands right now?
Yeah, Tim, I mean, I think what we're seeing right now, this is just sort of the next step in sort of the China-U.S. saga around their talks, from everything from tariffs to obviously what we're seeing with TikTok. And with TikTok, this is something, that President Trump has talked about for quite some time now, and it's something he definitely wants to see come together. I mean, during the campaign, he talked about how with younger voters on TikTok, it sort of helped amplify his momentum. So, he would like to see this deal come together. And as we look forward to September to October next month, with the two leaders potentially heading to the APEC summit. I think we'll have to see if this deal ultimately comes together. But one thing we did not quite hear from today with the talk was we saw the movement around TikTok, but we're still looking to see what those details might be.
Yeah, I mean, devil in the details. But maybe everybody has always said to us, U.S. and China, complicated, right? So none of this stuff happens easily. And so it's going to be a lot of talks before we start to get kind of the final terms, if you will. So is it progressing? Can we say it's progressing?
I think when you think of the Trump administration, there's usually a lot of meetings, a lot of conversations that are being had. I think it's fair to say things are moving forward and moving in the right step. But I think anytime when talking about the Trump administration, you always have to sort of err on a side of caution, just because things can change so quickly. Something could change at this very second. You just never know. So even though things appear to be moving forward, still always proceed with a little bit of caution there.
One thing that Carol and I have talked about quite a bit, Skylar, is just the question of TikTok and why that seems like such an important issue, or why it is such an important issue. We understand the huge user base, certainly. We understand the power that the app has. But when you think about it from the perspective of Washington, D.C., and maybe from the perspective of China using this as a bargaining chip, what is that context?
No, absolutely. I mean, I mentioned this about, President Trump is, you could say he's a fan of the app in terms of how, the engagement is with younger voters. But then separately, I think it ties into what the president has sort of been trying to do during his second term, which is sort of, establish the U.S. And basically, if he's able to get the U.S. more involved in TikTok and have it be less, Chinese owned, that's a win for him, especially given how massive the TikTok platform is. If he's able to basically say that, TikTok in the U.S. are more aligned than TikTok in China, the president might see that as a win in U.S. dominance.
Hey, one thing I, though, want to get to, and I think Tim mentioned it, China ruled that, or maybe anyway, it's part of the backdrop.
We've been talking about it.
We have been. China ruled that NVIDIA violated anti-monopoly laws with a high-profile 2020 deal. So that is seen as ratcheting up the pressure on D.C. during these sensitive trade negotiations, Skylar. Is China just negotiating, showing leverage? I know TikTok's important. NVIDIA is really important, certainly, to the United States and AI. So I'm just trying to put that piece into the puzzle and how it explains what's going on here between U.S. and China.
No, absolutely, Carol. I mean, I think it's very interesting to sort of take a step back and just sort of lay out that, it's interesting that the agreement sort of came while the U.S. and China were meeting in Madrid. So I think that just sort of highlights the importance there. I mean, it's still, to be seen on if, this is China using this as leverage, but I mean, it definitely could impact tariff talks. So, we heard from Jamieson Greer earlier today in Madrid saying, that, a potential extension could come in November. But I mean, still a lot going on in this space, especially around AI and chips and all that stuff. So it will be interesting to see sort of what this investigation and how it wraps into everything going forward.
And how it wraps into what's expected is a chat between President Trump and President Xi on Friday. All right, we're going to leave it there. Skylar, thanks so much. Skylar Woodhouse, she is Bloomberg, Washington, D.C. News Bureau White House reporter, joining us there from the nation's capital. So we're watching that. We're looking for headlines. It's kind of a week where we are just going to be focused on headlines nonstop here, Tim.
Yeah, especially, we heard Skylar just mention AI in the context of AI as a bargaining chip when it comes to those conversations between the president and Xi Jinping later this week. Just in the past week, Carol, if we think about the headlines that have crossed, OpenAI said it's closer to converting into a more traditional for-profit company, nearing the resolution of negotiations with top shareholder Microsoft and outlining terms of at least $100 billion in equity for its nonprofit arm.
So much. Microsoft planning to put more computing power behind in-house AI models. And then today we even had a story on how businesses are relying on Anthropic's AI software to automate rather than collaborate on work. So there's a lot going on. And each of these companies are kind of like working with one another, but also competing. Let's get a gut check. Bloomberg News AI reporter Shirin Ghaffary joins us from the Bloomberg News San Francisco News Bureau. Shirin, what would you consider the most significant recent AI news and headlines? And I know there's a lot, but cut to the chase. What do we need to know?
Yeah, I mean, I think you hit on some of them. The fact that OpenAI said that it is closer toward an agreement with Microsoft and its restructure from a nonprofit to a for-profit is major. We've also seen them announce, or rather, we've seen reports of a major deal with Oracle on data centers. So I think we're continuing to see these AI companies basically try to move forward. At the same time, you are seeing political activity on this front as well, right? We've seen AI tech leaders go to the White House recently, and now this upcoming trip to the UK with Trump, where, as we reported, we are also expecting announcements around data center expansion.
What are these leaders pushing for, Shirin, here in the United States, and especially in the context of making sure that the U.S., I would imagine, stays or at least becomes the leader with this technology? What will help them do that?
Right. So they want to see, first of all, use of their products in government, right? All the AI companies have been very explicit about that. We're seeing them start to grow all their contracts, essentially, with trying to get apps like ChatGPT or Anthropic's Claude in the hand of federal workers.
Okay, wait, I just want to pause right there.
Yep.
What would federal workers do with these LLMs?
Well, it's sort of like with the chatbots. You can do a whole range. The whole point is that it's very general, right? But I think that they're thinking about, okay, how can you use it to sort of increase efficiencies in communication at these agencies? Can it do sort of data analysis? Can it summarize documents? Can it help people talk to each other more effectively? Of course, this is all very new, right? And even businesses, which sometimes can move much faster than government, that those businesses are still figuring out exactly how to make the most use of these new AI tools. So we'll see. I think it's still very early days for government adoption of these.
Carol, I know that the employees don't have to do those 5 things I did in the past week, emails anymore, that Doge wanted them to do, but I feel like that would be a good thing for AI to write.
Yeah,
like,
I
just
guess
write 5 bullet points of what I did last week so I could send it to my boss.
You just give it off. Give it off.
Just throwing it out there.
I mean, we're trying to figure this out and what's the way forward, Shirin? And I guess I find it interesting. I don't know if you saw this. Parmi Olson is a Bloomberg opinion columnist covering technology. And she, talked about the world's 4 largest tech firms will spend $344 billion on AI, mostly on data centers used to train and run large language models like ChatGPT. And now some experts and companies are exploring alternative approaches to AI, such as building software to help machines perceive their surrounding space or using techniques from before the advent of deep learning. So maybe some cracks appearing in the large language model thesis. It's just, who knows, right? We're kind of early in on this, but I do wonder, with the spend and the excitement and euphoria and the stocks that have run up as a result of this, like, you know, is it very possible that maybe it's not going to be what we all think it's going to be?
I think it's certainly a possibility that the expectations here could be very, very high, and we may be in for, you know, a reckoning if people feel like they're not able to solve all their problems with AI that they thought they could a few years out. That being said, I think, you know, ChatGPT, these kinds of tools are some of the fastest growing, right? I think ChatGPT broke records for being the most quickly used kind of technology out there. So, you know, clearly people are using it. Clearly, they have some reason to be using it. That being said, I think especially when we talk about these billions or even trillion, as Sam Altman has said, dollar plans around infrastructure expansion, the stakes are going up. This is not just about will these AI companies be financially profitable? It's also about now they're part of this much bigger supply chain, right? That involves real estate, that involves physical goods. And if somehow it's not penciling out for them to pay those bills in the future, then obviously the stakes are going up here for any kind of mismatch on demand.
Shirin, we're going to be speaking in our 4 o'clock hour with David Marchik, Dean of the Business School at American University. And this is a school and a dean who's trying to make this the first AI business school in the world. He recognized years ago this was the direction things were going. We're trying to figure out what the effect of AI is going to be on the economy here in the U.S. and outside of the U.S. too. We know Anthropic talks a little bit about this, but what have you gleaned in recent weeks about what jobs are at stake and what the economic consequences could be of this tech?
Yeah, absolutely. The funny thing about technology is, like, even with things like the internet or the computer, which obviously, changed the way we work, communicate, you don't see huge changes to GDP. Like, GDP has continued to grow. But so I think with AI too, I think a lot of traditional economists are skeptical that we're going to see this like overnight sudden shift in growth. And with jobs, that being said, I do think there are certain categories of jobs we're already seeing it start to really impact the way some people in the field do their day to day. I think the most clear version of that I've seen is with coding. We talked about Anthropic. Their tool Claude is very popular with coders. And, they've released economic kind of reports on how people are using their tools. And coding is one of the top use cases. And actually, they're starting to see overall people shift from using these kinds of tools, not just to augment or be like an assistant, but actually start to replace entire workflows, they're saying. And so that has obvious implications for jobs. And at the same time, you're seeing this slowdown in hiring in some cases for entry-level programmers. So that's one example.
I have to say, when you and I play around with it for different things, sometimes we're just like, oh my God, that would have been like an hour's worth of work. I
find it really helpful for search. It's like you ask the question you want answered rather than figuring out how to search for something with a search.
I used it to draw a horse yesterday.
Really?
I was just curious. I was playing
around. Could it do it? But did the horse have 4 legs and everything?
It had 4 legs. Okay. Shirin Ghaffary, thank you so much. She covers AI. We're talking sports when we come back. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all advancing. Little change right now on the Dow. However, we've got the S&P 500 index at a record 6606, up 0.3%. NASDAQ, the composite index, also at a record up 161 right now, up 0.7. Our Mag 7 index now up 1.5%. Tesla advancing by 2.1%. Spot gold up $34 the ounce, up 1%. West Texas Intermediate crude up 1%, 63.33 a barrel. The 10-year 4.03%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here on Bloomberg Businessweek Daily. Now, you might recall a story from the Bloomberg news team earlier this month. It was about Apollo Global Management being poised to launch a $5 billion strategy to invest in sports deals, marking another major asset manager targeting the booming sector. It's about long-term lending of strategic capital to sports leagues and clubs. They've also consider owning stakes in teams, though this wouldn't be a priority and may hire new staff. And our next guest, Tim, definitely knows about investing in sports for his investors.
Jeff Luhnow, CEO of Blue Crow Sports Group, also former Houston Astros president of baseball operations, along with Bloomberg News Texas bureau chief Julie Fine. They both join us from our Dallas bureau for Bloomberg News. Jeff, really good to have you with us. Julie, always good to see you. Thank you for joining us. Jeff, multi-club ownership platform, a sports investment platform backed by private equity investors, high net worth individuals, family offices. The company began back in 2021. Numbers are not public, but financially, give us an idea of where this company is, what your focus is, and how you compete against the big folks such as Apollo.
Well, you rightly pointed out there's a lot of interest in sports. A lot of American investors are investing in European football, et cetera. We started as a startup 4 years ago. We wanted to pick our niche. Our niche is to find, own, and operate clubs in desirable locations that have big growth opportunities. So we invested in Cancun FC in Mexico, Club Deportivo Leganés in the suburbs of Madrid, and Luhnow in the Normandy area of France. And those are the three teams, one in first division and two in second division. And the key for us is to operate those clubs well and allow them to make money and to win games.
Jeff, you talk about the key is to operate them well and to win money in games, but really what's the long-term plan? Are you looking at other sports? Do you want to stay in the soccer world? What's next?
Well, we've got a lot of work to do in football. We want Leganés to get back to first division. We want Luhnow to establish itself in second division. And now that promotion and relegation is coming back to Mexico, we'd like Cancun FC to get into Liga MX. So I think our to-do list for the next 5 years is pretty busy and pretty filled. But I think over time, we will certainly look at other sports, but right now our focus is football.
I want to talk a little bit. You were with the Houston Astros. You were fired after a baseball scandal. You have denied any wrongdoing, but you are going now and asking people for money. Has there been any issue when it comes to trust?
No, not at all. In fact, many of the investors in Blue Crow are people that were either investors in the Astros or knew me from that time. If anything, it's been an advantage because people knew of what happened with the Astros after we got involved in getting the World Series in 2017 and reaching it in 2019 and, making money for the club and its investors. So we have a very diverse group of investors, people from private equity, entrepreneurs, technologists, et cetera, and they're all very bullish on what we're building.
Does it ever come up, though? I am curious, Jeff. I know we all have our pasts and histories. And I just think, sometimes when it comes to money, people do at least be like, well, let me talk to you a little bit about this before maybe I think about investing.
Well, I think a lot of people want to know about my time in baseball and what we did and how it relates to football. It's never come up as a negative. I was telling Julie earlier that in Europe, baseball is not a very big sport, so people don't even know who the Astros are or who Jose Altuve is. So they really just care about whether we're going to win on Sunday and whether we're going to get 3 points or 1.
Hey, one thing I want to ask you, too, though, Jeff, when it comes to owning a team, is it a buy and hold strategy, or because you have investors, is it buy, hold, build up, and then sell for a premium so that there are returns to your investors? I'm just curious.
That's a great question. And the way to make money in football, as you noticed, is you can either hold and sell for more than you bought, but you usually have to cover losses in the meantime. But we're trying to run these clubs to win and grow revenue and eventually be profitable so that we can potentially return some money to our investors as we go along. We're not looking to buy and flip. A lot of the things that we do in our clubs require 3 or 4 years, 5 years for them to start working. And that's why, for us, we're talking about more long-term holds.
Talking about long-term and working, we talked earlier about technology and analytics. What role is AI playing in all of that?
Well, the world of football has lagged baseball and basketball and other major sports in terms of the use of analytics and technology. But that's changing. And part of the reason it's changing is in football, you have 11v11. So there's a ton of data and there's a ton of games all over the world. And it's hard to analyze that with just a few data scientists. So AI allows you to analyze a much, much larger volume of data and to generate insights from it. So I think it's going to be increasingly important in our world.
Jeff, we talk a lot here in the U.S. about ballooning sports team valuations. I mean, you're certainly familiar with this. We just had, the deal news about the New York Giants, for example, with American football. And I'm curious if you think the growth here in the U.S. will start to slow down and the real opportunity for valuations to grow as they did here in the U.S. in the last 2 decades. That opportunity is outside of the U.S. now.
I think that, well, first of all, I've always been skeptical about valuations of major U.S. sports, but I've always been wrong. I've been saying that things are overvalued for the last 30 years, and they keep selling for more and more down the road. So I'm not good at predicting that. I do think that buyer beware on European football because there is relegation and promotion, and you have to do things well in order to increase value. And there's a lot of investors that are losing money in this sector as well. So we're hoping to be one of the winners. But we're being very cautious about what we invest in and how we do it.
What makes you skeptical about U.S. team valuations? You know, it's a supply and demand question, right? Is it more complicated than that?
Well, I think that generally the revenue is driven from TV contracts for most of the sports, and I just can't see those continuing to grow at the rate that they've grown. But I know it's happened. So, like I said, I'm not a good predictor of that. But I think ultimately everybody's going to want to consume sports on their mobile or on their their handheld, and that changes the dynamic a little bit. And some of these bigger contracts, may not get renewed at the increases that have happened in the past.
This is going to be a very big time for football coming up with the World Cup. We have here in Dallas, we have the most matches. Houston, your hometown, has a lot of matches as well. What do you think this attention on the sport in the United States will do for it overall?
I think it's going to be great for all of North America, Mexico, United States, and Canada. I'm very bullish on North American football. I have been since the beginning when we invested in Cancun. And, I lived through the '94 World Cup, and everybody was expecting football to suddenly become one of the big 4 sports. I think it has grown, but I think it's poised to continue to grow. It's never going to beat NFL. It's never going to beat MLB or NBA, but I think it can continue to grow its fan base, and I think it can continue to produce good results.
You are now in soccer. You came from baseball. I want to know what your future is.
Well, like I said, we're just at the beginning. We've been doing this for 4 years. We've got a lot on our to-do list. I'm going to be focused on building Blue Crow for the foreseeable future.
Is there an investor that you would love to have with you for the ride? Is there a team that you would love to go after? And I know who's going to talk, right? Because you don't want to kick up the valuation. But I am just curious, because and anything you can share on your investors or who else you'd like to have with you.
Well, we have a great cap table. We've got some people that have in the NBA and the NFL and MLB, et cetera. I don't like to disclose who they are because that's their business. But we're well funded. All of our investors have offered to put more money in if they need to. So really at this point, I think we have an all-star cap table. We've got a great plan, and now it's just a matter of going out and continue to execute.
Jeff, 20 seconds, women's sports, how does that play into it? It's kind of popular. I don't know if you've heard that really quickly.
It is, and there's a lot of money going into women's sports. We have a female team in Spain. We're looking at the sector very closely and trying to figure out what our strategy is, but it's growing in the U.S. a lot, and it's growing in Europe quite a lot, and I think it's going to continue to grow. All
right. Well, you're always welcome to come back and share some more. Jeff, thank you so much. Jeff Luhnow, CEO of Blue Crow Sports Group, along with our Bloomberg News Texas Bureau Chief, Julie Fine. This is Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're just coming up on, I don't know, the moment where we're just about
It's Monday. It's Monday.
Can you tell? We got about almost an hour left in today's Monday trading session. There's a lot coming at investors right now. You've got the S&P 500 just up about 0.4 of a percentage point off its best levels of the session. Dow is up just a little higher, up 33 points. It too is well off its best levels of the session. Nasdaq 100 up 0.2%. It too outperformance there, but again, off its best levels of the session.
Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Carol Massar. With us is Bloomberg News cross-asset reporter Emily Graffeo. Emily, what are you watching?
Okay, well, I'm watching a milestone today. Google, or as we know it as the parent company name, Alphabet, ticker GOOGL, crossed $3 trillion in market cap today.
Whoa.
It's joining the ranks of just 3 other companies, NVIDIA, Microsoft, and Apple. So those are the only other publicly traded stocks above the $3 trillion. I think this speaks to the power of the U.S. stock market and the power of tech as well. But of course, when we cross a milestone like this, the questions are, can this run keep going? And so when you look at kind of what the charts are telling us, if you look at the RSI, the Relative Strength Index, it stands at nearly 90, which is a multi-year high, and it's above the level which technical traders say is overbought. So can the run keep going? Maybe not, but at least today it's up about 3%, and again, crossing that milestone.
I keep thinking about our environment, right? And we've talked so much about uncertainty, and I still feel like there is a lot of uncertainty still out there. But like maybe for a name like Alphabet, whether it was some of the legal overhang, right? There are some things that can cross off its list that maybe makes the way forward a little bit more clear.
Yeah, I mean, there was a moment in time where they were potentially going to have to sell Chrome, and for a lot of people who think of Google, they think of Chrome. That's kind of one of their core products and a name that everyone knows. It's really interesting if you look at just the moves that it's had in the last several months. It's up more than 70% from its April low. So that added roughly $1.2 trillion in market value since the tariff Liberation Day lows.
That's nuts.
Yeah,
that's a lot.
That's like multiple car companies all combined.
I know, right? Exactly. Ka-ching.
Well, we're not going to go to a car company now. We're going to go to an ETF.
Yes.
Because you're here and you love ETFs.
I love ETFs. And, I'm on the cross asset team. So I have kind of a cross asset market monitor on my terminal. And uranium caught my eye. So I'm looking at URA. This is a Global X uranium ETF. It's up 8% right now. And we got a little bit of news, I guess, in the nuclear and the uranium world. So the Trump administration's top energy official, Chris Wright, was speaking at a conference today in Vienna, and he said the U.S. should look to boost its strategic uranium reserve to buffer against Russian suppliers and increase confidence in the long-term prospects of nuclear power generation. So you need uranium to power nuclear energy. Anytime there's really any news in the marketplace that's very positive for nuclear energy, we tend to see uranium stocks rally. This ETF in particularly, it holds miners, and I'm just looking at the gains, the current gains right now. It's at a record high, I believe. Actually, no, excuse me. It's at the highest since 2011, and it's up about 70% year to date.
Yeah, it up more than 8% just so far. I'm surprised to see Russia supplying about a quarter of the enriched uranium needed by America's fleet of 94 nuclear reactors, and those generate about a fifth of U.S. electricity. The challenge, and we talk about this all the time, is that these are very difficult, costly, and time-consuming to build. Oftentimes they go over budget. We haven't done it. We did one, a few in Georgia as the U.S., but it's like, what are the next ones?
Right. Yeah. This might be a case of there being a lot of market sentiment building before we actually see the real investments being made.
It's up 125% since early April.
Yeah.
Like that bounce is wow.
Yeah. I know. Even more than Alphabet. Uranium. Who would have thought?
I'm looking at RSI. It says overbought. I was just going to say. Let's go to CoreWeave.
Okay, CoreWeave, last one. It's up about 8% right now. They said that NVIDIA has agreed to buy cloud services valued at $6.3 billion. I mean, this is just a piece of news that if you're a cloud services provider, you have a big check coming in. It's good for the stock price. And that ticker is CRWV. And they secured billions in deals to provide capacity to companies developing AI models. NVIDIA is just one of those customers. They also have deals with OpenAI and Microsoft. And again, it's all about that AI boom and the investment needed and who can provide the infrastructure here for all of that.
That's just an IPO this year, right?
Yeah. It's
Livingston, New Jersey. That's where it's based.
Livingston, New
Jersey. Of all
the
places where a cloud services provider.
Are you going to make a New Jersey joke?
No. I'm not going to. You just don't see them based in. I mean, Livingston's like a suburb.
All right. Yeah.
An up and coming one, I guess, because they're going to have all this AI investment. But yeah, the stock is up almost 200% since that March IPO.
Good bunch of stocks on the move. All right, Bloomberg News cross-asset reporter Emily Graffeo. Be sure to check out our Stock Movers podcast, 5-minute episodes, the biggest winners and losers in the market. You can find it on Apple, Spotify, or, Tim, anywhere you get your podcasts.
Hey, we are just wrapping up our TV portion of our program here on Bloomberg Businessweek Daily, but we got a great Show coming up on radio, YouTube, and Bloomberg Originals. The next phase of U.S.-China trade talks. Also, the dean of the business school who wants his school to be the AI-first business school. Did some time at Carlisle. He knows what he's talking about.
Yeah, President of Google 3 years ago, meeting up with them and I think giving them a jolt when it comes to AI. This is Bloomberg.